ஹாய். இன்னைக்கு நம்ம ஆர்டிக்கிள் என்ன டிஸ்கஸ் பண்ண போறோம்னா, காமன் ஐடிசி ரிவர்சல் அண்டர் ரூல் 42 அண்ட் 43. ஓகேங்களா? ஸோ இது நம்மளோட பிராட்காஸ்ட் நம்பர் 3. ஸோ ஃபர்ஸ்ட் வந்து ரூல் 42 வந்து பார்த்துருவோம். ஸோ as per ரூல் 42 வந்து ரிலேட்டட் டு இன்புட் அண்ட் இன்புட் சர்வீஸ். ஸோ ஐடிசி in respect of input and input service which attracts provision of section 17(1) and section 17(2). ஸோ எந்த இன்புட் அண்ட் இன்புட் சர்வீஸ் செக்ஷன் 17(1) அண்ட் 17(2) அட்ராக்ட் பண்ணுதோ, ஸோ இன் தட் கேஸ் காமன் ஐடிசி ரிவர்ஸ் பண்ண வேண்டும். ஓகேங்களா? ஸோ செக்ஷன் 17(1) டாக்ஸ் அபவுட் partly used for business and partly used for other purpose. So if input or input service partly used for business and partly used for other purpose, that common credit should be reversed for the non-business purpose. Okay. And as per section 17(2), if an input or input service partly used for taxable supplies and partly used for exempt supplies, that common credit should be reversed to the extent of exempt supplies. Okay. So I have given a formula for a common ITC reversal. It's very simple: exempt supply divided by total supply into common credit. So exempt supply includes nil rated supply, exempt supply, non-GST supply. So exempt supply includes all supplies except duty script sales, interest income, and Schedule 3 supplies. In Schedule 3 supplies, there are two items are to be considered as an exempt supply for the purpose of Rule 42. Okay. What are the two supplies? The first one is sale of land and building. Sale of land and building, neither supply of goods nor supply of services, but for the purpose of calculating exempt supply, the sale of land and building is to be included. And another one is sale of warehoused goods sales. So that is which is one of the Schedule 3 supplies, but should be added for the calculation of common ITC reversal as a exempt supply. Okay. So what is a total supply? Total supply means aggregate turnover, which includes the taxable supplies, exempt supplies, non-GST supplies, and all other supplies excluding tax. Okay. So what is a common credit? The common credit is input tax which is used for supplying both for taxable supplies and exempt supplies, are used for both business and other purposes. Okay. So this ITC to be derived from the input tax availed, then we have to calculate exempt supply and total supply, then only we could find out the common ITC which is to be reversed. But the query is which period data is to be taken for the calculation. For example, for say I'm a rice trader, so my turnover is 10 crore. The ratio is equally 50% of exempt supply, 50% of taxable supplies. So in this scenario, I have to find out which are the common credit used for supplying this both supplies. The usually common credits will be the rent, audit fees, repairs and maintenance of machinery, which is used for both supplies if it is a manufacturing cases. And what other telephone bills and internet charges and stationaries which are commonly used. So whatever be the input or input service which are commonly used for supplying both taxable and exempt supplies, it is to be considered. So in this case, I am having a telephone bill, I am having a rent invoice, so I am having a internet supplies, I'm having a AMC invoice for the period of 2024-25 for the whole year. So in this case, which period figures I have to take for a calculation? For example, we will discuss about one by one. So I'm having a telephone bill, a postpaid bill, which is dated 2nd January 2025, which is related to the December month consumption. So the consumption of the input service is for the month of December. So in this case, we have to apply the figures of December to know the ITC which is to be reversed. Okay. So in another case, we are having a internet bills. So usually the internet service provider generate invoice on the starting of the month for the future period. For example, the 1st January, they generate invoice for the month of January 2025. So in this case, we have to we have to consider the figures of January 2025. I'm getting a AMC invoice for the financial year 2024-25 in January 2025. So in this case, I have to take the whole year figures, whole year exam supply and whole year total supply to calculate the ITC to be reversed. These are the common things to be considered. Okay. And another one point is to be discussed regarding the AMC bill. It's related to 24-25, which is up to 31st March 2025. But up to December only, we are doing the workings and reverse the common credit. Hence, while filing GSTR 3B for the March 2025, we have to again recalculate whether we have reversed the correct figures, or if we have shortly reversed, we may reverse the balance in the month of March 2025 for the whole year. We have prepared an Excel template which is very easy to understand. Once you have entered a figure, it will calculate automatically, and you will get the ITC which is to be reversed. We will see with the examples after we go through Rule 43. So the next slide is Rule 43. What is Rule 43? Rule 42 is about input and input services, ITC attributable to the input and input services. Rule 43 is about capital goods. Okay. So the same concept, ITC in respect of capital goods, which attracts the provisions of section 17.1 and 17.2. So we have already seen what is 17.1 and 17.2. So which is partially used for a business and partially used for a business purposes. Then common ITC reversal is required, and the same partly used for taxable supplies and partly used for exempt supplies. The common ITC reversal is required. And in the capital goods, if you have a claimed depreciation, you are not eligible for a ITC. If you have claimed depreciation for the tax value. So what is the common ITC reversal formula for Rule 43? The same formula. There is no changes in that. Exempt supply divided by total supply and common credit multiplied by common credit. This is the common formula. But before that, we have to look into some issues. As per the GST law, useful life of a machinery or any capital goods which is related to business is 5 years, which is divided into 60 months. So in this concept, we could calculate that a person eligible to claim ITC every quarter 5%. But practically, it is not possible to claim ITC every month or every quarter up to the completion of useful period. Hence, we could avail the ITC on the month of purchase of capital goods itself, but we have to reverse the common credit every month for the useful life of the machinery. So as per Rule 43, the common ITC reversal formula, a small change only is there, exempt supply divided by total supply into common credit for the month. So we have to calculate the common credit for the month, which is very easy. We have to divide it by 60. So 60 months is a useful period. If we divided by the 60, we will get the common credit for a month. Okay. So the formula will be the exempt supply divided by total supply and a common credit for the month. The exempt supply and total supply have the same meaning as we have discussed in Rule 42. Okay, we will see the Excel template which is prepared by us for the exclusive benefit of the members, and we will share the Excel sheet along with this broadcast to the members of the attic. So to calculate the common ITC which is to be reversed, you have to enter the data in the sheets. You will get the ITC to be reversed. For example, we are in a December month GST 3B filing status as of now. So in this month, we are having a 15 lakh taxable supplies. There is no zero rated supply. So we have a zero rated supply of 5 lakhs and duty scrip sale of 1 lakh. And having an exempt supply of 10 lakh. We are not having a RCM outward supplies. So exempt supplies includes RCM outward supplies. I have omitted this point. So sale of land, if you are having, you may enter it. In this case, they are having a sale of land of 10 lakh. And supply of warehouse goods, schedule 3 supplies, interest income. If they are having any interest income, you may declare here. Sale of securities. So sale of securities is also included in the terms of exempt supplies for the purpose of calculating common credit. Okay. So if you have a sale of securities, for example, a person have a intraday trading or F&O trading in the month of December for the value of 50 lakhs, that also to be considered for calculating a exempt supply. Okay. Okay. So total supply will be there. The total supply is 41 lakh 55,000. The exempt supply is 20 lakh 50,000. How this 20 lakh 50,000 is calculated? As a 10,000 exempt supply and 10,000 sale of land and building and 1% of sale of securities. For a sale of securities, to calculate exempt supply and total supply, we could take a 1% of figures is enough. Okay. So the exempt supply is 20 lakh 50,000. What is the common ITC? If a common ITC is 500 or 5,000, you will get a ITC to be reversed. So in this case, the total supply is 41 lakh and exempt supply is 20 lakhs. Common ITC is 5,000. ITC to be reversed is 2,467. Okay. It is a very simple. If you give the input, you will get a common ITC which is to be reversed. Okay. The same concept applicable to common ITC reversal on capital goods. So for example, a machinery purchased on December for the value of 7.5 lakhs, 18% GST will be 1.35 lakhs. So we have entered a common ITC. So common ITC for the month will be divided by 60, 2,250. So common ITC for this month is 2,250. Okay. For the every month, 2,250 is the common ITC up to the period ending of 60 months or 5 years. Taxable supply for the month of December is 10 lakh and exempt supply is 1 lakh. So in this case, the total supply will be 11 lakh and exempt supply will be 1 lakh and ITC reversal will be 205. Okay. So every month we have to enter the taxable value and exempt supply and other supplies. You will get a ITC to be reversed. For example, In the month of January, there is a no outward supply. Then for the reversal, we have to calculate the previous month figures. So the same reversal will be applied here. It is given in the notes. For example, if there is a no exam supply in a month, then reversal is not required. If there is a no taxable supply in a month, then the whole amount should be reversed. We may claim ITC on the month of purchase itself. As per Rule 43, if we have utilized the amount, if we have utilized the ITC, then we are liable to pay interest for the reversal. Okay. So you may decide how to utilize ITC, whether it is in the month of purchase. You may claim in the month of purchase, but utilization is based on whether you want to pay interest or not. So my opinion is you may utilize. The interest amount will be very much lower. Okay. And another one more point I have to discuss with you. So machinery is purchased on December, and we are reversing monthly basis. Every month we are reversing from December, January, February, March. For the 4 month we have reversed properly. Whether we have to calculate the whole period taxable supply and whole period exempt supply to calculate whether we have reversed correctly or not. No, it is not required, because machinery purchased on December only. Thereafter only it will be put to use. So reversal using this formula itself enough. So we need not to calculate again for the whole year to check whether we have reversed the ITC correct or not. So I hope you understand, and if any query, you may post it in the group. We will share this Excel template to the benefit of the members. Thank you.